talk about like why this even exists. So in the wake of 2008, 2009, there was a lot of financial regulation that came into play in order to try to prevent 2008, 2009 from happening again, right? So there was financial reform like Dodd-Frank, for example. And so in order to prevent banks from making the kinds of pretty profligate loans that they made that led to 2008, 2009, they rightfully introduced legislation to require banks to underwrite to a higher level. But unfortunately, like what happens in capitalism is it's in some cases, it's like a game of whack-a-mole, right? So, okay, you prevent banks now from making risky loans based on poor underwriting, but then other players in the financial ecosystem stepped in to take their place. So the best example I could give you is, say you have a factory, just some sort of business, right? And your business performance isn't good enough for you to be able to get a loan from Chase or Wells Fargo or Bank of America. But let's say for a slightly higher interest rate, you could get a loan and still get the capital that you need to grow your business, but it's just coming from a private lender. So it's not a household name like Wells Fargo, but you can still get access to that debt and buy the machinery that you need or buy a new facility or whatever it is that you need that money for with respect to your business. That's private credit. So somebody else just stepped into the hole that was left by banks because they could no longer play because regulations limited what they